tensions between the US and China obviously center on technology, but also access to critical minerals. China has been threatening or even imposing trade export embargoes on some critical minerals. I just mentioned how it's clamping down now on the export of electric vehicle battery technology. Our guest says critical mineral flows are now dictated by geopolitical allegiance. There's a race to secure those substances. We're joined by Ghali, Senior Commodity Strategist at TD Securities. It's great to see you.
Thanks for having me, Andy.
I mean, the rare earth metals market is tiny compared to copper. We've seen this jostling for positioning in that market, but now copper, I mean, this is happening on a much bigger scale.
Yeah, absolutely. I mean, copper tariffs are top of mind, but I think when I zoom out, what we're starting to see and what's really important for our clients is that every day we are inching closer to a wartime economy. Critical mineral strategy for the West is a national security strategy that is facing an increasing sense of urgency since China, to your point, issued export controls on rare earth elements. And that strategy is now fueling competition to secure resource access within the United States and within China. We've seen significant signs of stockpiling behavior, both in the United States, as traders are incentivized to rush metal in ahead of a tariff announcement, and within China with stockpiling that has strategic hues. But both of these systems are draining global inventory balances, and for many of these metals, those inventory balances have already drained below levels that are critical for the market structure. Well, metals markets in many instances are in a really precarious position because the longer this goes on, the more global inventory balances drain and the easier it is to squeeze the physical market.
Let's have a look at copper. Of course, this is the US price for copper and it's spiked. And you could say this is an artificial thing. It's in anticipation of tariffs.
Yeah, it's in anticipation of tariffs. President Trump announced that the tariff rate would be around 50%. So
massive,
I would argue, yeah, for the time being, the US copper price is dictated or as highlighted by CME Copper, is not reflecting the tariff rate that the president has floated. So there could still be a lot more to go on a price perspective. But the interesting thing is that if the implementation date is on August 1st, then shipments that were in transit into the US that might not have time to arrive on shore before that date might be dumped into the LME. So you now see this dislocation where global prices are a little bit under pressure in anticipation of that metal being dumped there. But the interesting part is right after that occurs, we actually think global inventories will resume their depletion. What's interesting is over the last several years, there have been so many frictions being added to global trade, and particularly so for raw materials, and particularly so for critical metals, such that Russian metal is in some instances sanctions or frowned upon for holding on your balance sheet. Some Chinese brands are tariffed in the United States. China has lowered their VAT refund rules, which also keeps metal into the United States. So we're now in a position where metal that flows into the US or flows into China is highly disincentivized from flowing back into global inventory pools, whereas there's nothing preventing that metal from being sucked out of global inventory pools. This is a really precarious situation.
And of course, you've got stockpiling, artificial shortages. It's inefficient, isn't it? It creates uncertainty, or discourages investment.
Right. I mean, ultimately, this is the end stage of the deglobalization narrative. Trade becomes less efficient, it becomes more costly, and raw material prices have to reflect that.
Wow. Just because countries, a power struggle, countries are anxious, they don't get caught short on these materials.
Yeah, absolutely. And I mean, you have to consider that the threat is strategic in nature. China has built a dominant share of global processing for many of these critical minerals. The West also fears China's resource diplomacy in that they have heavily invested in Africa, heavily invested in Latin America. And so the West sees that as a threat for their own resource access. So they feel something must be addressed, and this is the first stage of that action.
And part of your thesis there is that to some extent, price of commodities in the USA could become disconnected from the rest of the world.
Yeah, global prices become more disconnected. This is actually something that happens fairly frequently in commodities prices, but historically, those disconnects were arbitraged away at certain levels. The levels at which they can be arbitraged away are now significantly higher because tariffs are a very significant friction to that arbitrage. The way, or really the conclusion that we're coming to is that a world in which the trade of raw materials is fragmented is perhaps a function of geopolitical allegiance more so than market efficiency, is a world where raw material prices have to be higher, and perhaps significantly so.
It's interesting, yeah. I'm just thinking if material prices are higher in the U.S. domestic market because of tariffs, you would think that would discourage domestic manufacturing investment.
Yeah, I mean, this is the challenging part, right? When it comes to bolstering U.S. smelter output.
Right.
There's really a limit to how much investment you can expect in the next 5, 10 years. You can imagine a scenario where 30 years from now, maybe something can be done if the price is right. But between now and then, the U.S. will have to continue to import that metal. So perhaps this is really a temporary solution. If the West's critical mineral strategy is about national security, then perhaps the tariffs are really about stockpiling, about incentivizing physical traders to move metal into the U.S. And if that's the case, then perhaps that's a temporary solution until such a time that those supply lines can be deemed as secure.